Happy noon, everybody. Welcome to Strategy Now here at MarketStream.live. My name is Joe Cusick from the Cusick Group, securities provided by MoneyBlock. With your Strategy Now midday update, quite a rally on our hands. Right now, I'm looking at the broader market modestly off the lows. As a matter of fact, the NASDAQ and the S&Ps were limit down last night. For those of you that trade futures, you know that if the Dow Jones actually made it limit down, that basically would have meant that everybody would have been running for cover. The markets have rallied back. The Dow Jones, which adds about 174 points, up about almost 0.9%, at 18,496. To put this in context, the Dow futures are still pricing in the potential to move either up or down into the December expiration on the futures of 800 points. So there's still some potential big moves in there, and I just want to highlight that. The S&P 500, it gains about 19, looking at the S&P futures, up about 0.6% at 2153. S&Ps are pricing in to the DC expiration futures still the ability to move about 28, almost 29 points, either up or down. And the NASDAQ right now, looking at the NASDAQ December futures, they're up about 17 points, or about 0.35% at 4817. Pricing in still the potential until DC expiration of the futures moving potentially either up or down around 47 bucks. So you can see that the action has been fast, it's been furious. And also just taking a look at the volume here in the midday, New York right now is trading at 623 million on average at noon or 1:30, usually around 327 million. NASDAQ 1305, and the average is 756 million, so way above average there. Advancers obviously outpacing decliners, both on New York and the NASDAQ, as well as new highs outpacing new lows, both on the NASDAQ and the New York Stock Exchange by a broad margin. Now, taking a look at the sectors, what's the strategy now? What are strategists now positioning in? I'm not saying that there's going to be this big cyclical or sector rotation at this juncture. It's what are they trading now? And right now, the financial sector, which in general is up about 3.3%, is up and in play. And specifically, banking names continue to outperform amid hopes of potentially less regulation or reduced regulation at this point. You continue to also see that there's a steepening of the yield curve here in the United States. As a matter of fact, we'll get into it in a second, but the 10-year yield has topped 2%. There are a lot of institutions who have been waiting more than 6 years for the 10-year yield to be solidly over 2%, and it is occurring today. Taking a look at the S&P ETF that tracks banks, KBE, it's trading 36.34 right now, up about $1.40. It's up about 4% today. Just taking a look at this and the options on the KBE, they're still pricing in the potential for this underlying to move about $1.34, either up or down. Vol is relatively low, so there's not heightened expectation of big violent moves. So this is in play. If in fact there was some fear or some expectation that this have air pockets of when the stock could either gap up or down, Vol's not telling us that right now. And what's also, when you look at some of the individual components that make up KBE, one that stands out is JP Chase. JPM is up about $3.38, trading at 73.41. It's up about 4.8% today. It's trading above where the KBE is trading right now. In other words, up 4.8%. The KBE is up about 4%. This is leading the way. The JPM options are pricing in the stock to still, till the end of the week, move potentially about 72 cents, either up or down. And vol is low there. Even though we've had this big spike, a big move, volatility is still low. That's telling me as a trader, me as an investor, that there's not a heightened expectation of violent moves currently as it stands, based on where the market makers are pricing the potential for the stock to move. The broader sector continues to move up to the upside, and we're going to see if that continues throughout the week, and we're going to see if this continues to be one of the leaders to the upside either way, it's impressive, and you want the financials to be in that leadership role. One sector that everyone is talking about, we've been talking about this for the last 2 weeks, is the biotech. Biotech has been outperforming the healthcare sector. As a matter of fact, biotech is up about 3%. And you can clearly see that if you look at the ETF that tracks the biotech sector, IBB, it's up about 8.2%. It's trading at $282.95, up about 21.33. The options are still pricing in the potential for this underlying to move about plus or minus 388. The vol is still low at 38%. It's in the lower IV rank. The reason why I'm bringing this to your attention is because I want all of you that listen to our discussions to understand that implied volatility is a guidepost for expectations of future movement in the underlying asset that we're talking about. If that expectation of violent moves is low, then whatever the current trend is, as you hear in market pundits say, your friend. Now they can say it's going to go up and down, but the bottom line is volatility is the only thing out there that's going to give you that forward-looking expectation. So that's why I bring it to your attention. Now, the biotech industry is breathing a sigh of release with Trump being in as president. Clearly, there was concern that there could be drug pricing measures under the Clinton presidency that could be detrimental to this industry. Well, they're now expecting that the Trump presidency will be more of a kinder fate for them. Also, Proposition 61 was defeated in California, so you don't have the pricing thresholds that they were potentially trying to hold the biotech industry to, as far as marking out drug prices based against a military index. The other thing that you want to look at too is managed healthcare names. They're getting really whacked right now. IHF is the ETF that tracks the healthcare services industry. It's trading around 116.22. We talked about this last night. It's down about $3.48, or around almost 3%, 2.9%. The options are still pricing in the potential for the underlying IHF to move either up or down $2.91. Vol is still relatively cheap at 51%. It's actually on the low end. So we'll see if vol moves after we've had this downtick. You're going to see some of these managed healthcare names, though, getting looked at a little bit more scrutinized after this pullback. Maybe even get a pickup if it gets cheap enough. But we're going to have to wait and see, especially since we're we're not even in the realm of what the policy is going to be as far as actually Trump repealing the Affordable Care Act or repealing it, making changes. But obviously with a Republican presidency, a Republican Senate, and a Republican Congress, this is going to be on the doorstep and going to be quite volatile. The energy sector up 1.3%. It trades higher, lockstep with crude oil futures. Now, the EIA report did come out this morning. There was a build, a little bit more than what was expected, and about 2.43 million barrels. There was an expectation of around 1.3 million. But gasoline stockpiles continue to fall at 2.84 million barrels as far as a draw from the stockpiles in gas. You see that West Texas, the crude contract that we watch here in the United States, that's currently up about 1.5%. And currently crude is trading at $45.65, up 67 cents. Crude is pricing in for the next week the potential to move about $2.08. So there could be still some movement either to the upside or downside in crude. Obviously, as we get closer to the end of the month, where we're going to have that big OPEC meeting, we're going to see what they're going to say about their output, especially now with a Trump presidency. Gold futures. Gold futures spiked last night. As a matter of fact, they spiked off their lows. It got as high as $13.38 on the gold futures contract. It's subsequently pulled back. As a matter of fact, looking at it right now, trading at $12.72. It's had a $50 range in the last basically 8 to 10 hours. Pretty impressive. Down about $2. The futures are still pricing in the potential for gold to move over the next basically week to 10 days of around $32. So we could still see some movement here. I think there is a little bit of less of a safe haven trade maybe a little bit of a tinge of an inflation trade coming into gold. We'll keep an eye on that. Gold miners, though, looking at GDX, up about 3.6%. Vol is moving in the gold miners. It has spiked up a little bit, getting into that mid-range at around 30%. As far as IV rank, the options in GDX are pricing in the potential for the stock to move either up or down about $1.55. But gold still remains strong. What's really strong is copper. Copper's up near 3%. It's been an impressive move in copper for the last 12 sessions. This is a real statement that there was a belief, regardless of who was getting into office, that infrastructure plays are going to be in play, and copper is on the move to the upside. We're going to watch that action. You also saw iron ore prices spike up about 6%. Again, infrastructure plays going to play out. That's going to play out well in the steel stocks. So you're looking at AKS, Zeus, Mattel across the board. Finally, we had mentioned this at the top of the strategy now, the treasury markets. Here in the U.S., the treasury complex has, the long end of the curve has just been getting whacked. The 10-year and the 30-year continue to underperform the 2-year and the 5-year. You're seeing that that spread widen. We talked a little bit about it this morning, but the yield on the benchmark 10-year is right now up 16 basis points up above 2.01%, and that's off of the overnight low of 1.72%. TLT, which is the ETF that tracks the hybrid of the 10-year and the 30-year, they call it the 20-year hybrid, it's trading down $5.33. TLT is trading at 124.78, down about 4%. The options are still pricing in the potential for TLT to move up or down about $1.23 over the next 7 days. There is going to be continued volatility in the bonds, but right now, bond policy, the policy of the Fed, which I don't think are going to change that much, but we're going to keep an eye on the Fed funds tool that's offered by the CME, see if the probability of a rate hike in December starts to increase or decrease as we get closer to that event. But the bottom line is bonds are getting whacked. The safe haven trade, the bond trade, it's now really under pressure. You see that prices are coming down. I mean, the fact that you see that the TLT is down 4%, that's a huge price move when you're looking at yields that were currently at, on the 10-year at 1.72 to 1.8, now 2%. I mean, it doesn't even balance at all with the price risk that you have in these bonds. So it's going to be very interesting to see how that continues to play out, but I think this is going to still stay a volatile trade. All right, coming up at 3:30 Eastern Time, we were going to do Tech Talk. We're going to pull out, we're still in earnings season, believe it or not. I know it's been something that's been forgotten. We'll pull out a couple of the earnings trades that we want to keep an eye on that are going to be occurring and announcing after hours. We'll take the technical approach, looking at the charts as well as what the options pricing is telling us, and we'll give you a little bit more transparency. Until then, have a great rest of the trading day, and we'll see you at 3:30 Eastern Time for Tech Talk, 4:30 Eastern Time for the closing bell here at MarketStream.live. Take care.